Welcome to the recap for the last 2 weeks. We're going to run through the 13th and 18th of November and then also the 20th to the 24th. It was a patchy and rough couple of weeks for trading both the DAX and the FTSE, and there was basically quite a bit of loss, so $24 down. So that's across 1, 2, 3, 4, 5, 6, 7. So 7 trades. We had 3 small wins that were closed early compared to a regular target, and then 4 losses. So it was a really rough patch, and also I didn't trade every day because I had other things going on, and I guess that's the beauty of trading, is that it is a lifestyle thing that you can do, and basically that means you don't have to trade every day if you don't want to, but obviously the negative result is not ideal. But that's part of trading, understanding that the market will go against you from time to time, even if you do follow the rules. Now let's jump in, and starting from the 13th of November, see if I did follow the rules and do a bit of a recap so that we can learn how the markets function and understand what actually happens when the markets open. So looking at the Monday, sold here, was hoping to hit this close gap. So it was a valid trade, but ideally should have waited for a higher push up to these levels of confluence here. Had I have done that, may have been able to pull out, say, 40 odd points. However, the target wasn't hit, so a hard target didn't get hit. If you had to stop to break even, it probably would have came back and clipped you out there. And then following day, the market basically went right up, super high. So not ideal for the Monday, it just didn't work. Ideal situation is the market comes up, hits these levels, and then folds right down to that close to fill that close gap. Now we'll check to see if that does fill later on. I'll do a quick check now. Basically this gap hasn't been filled. This one here, and then also this one here hasn't been filled either. This one hasn't. Not sure about these next couple. So we are probably expecting the market to come down and fill those levels at some point. And by fill, I simply mean that during market hours, the market comes down and reaches those points at some point in the future. So drilling down, basically it was just a fail. Nothing really that could have been done. Perhaps you could have looked at it the other way and sort of saw it as building. You know, there's a few rejections here, and I'd really not want to get long against this confluence here, because often the market does just trade within these ranges when you get a layout on the Camarillo levels like this. Moving on to what would have been the Tuesday. Finally open. I'll just hover over that with my mouse. So the open. Before, in the pre-market, we came up, hit the R1 and powered down to what was the close and the previous day's high, so an extreme gap. Now, had you been watching that, there is a chance that you could have gone in because it is an extreme gap, it is a probable target. However, the market opened officially, where did we open? Oh, we did open up above here, and you'd be looking at about 36 points. Ideal situation here would have been to come up first, perhaps touch the R2 to give us a bit more leeway and less chance of potentially going up higher at the open, and then come down to touch that close gap. Didn't trade this day, and had I have gotten short, obviously that would have worked for about 30 odd points, but didn't trade that day. Now as we look further, we didn't see any rejection off these confluence levels here. They're a bit spread out perhaps, and obviously there was an announcement over here that really drove the price up. There's 150 points in that 5-minute bar there, and then the market continued to rally beyond that. So really powerful push long against the R3, and just no sight of being slowed down around that level at all. So it's good to see these things, to see whether you get a reaction, when you don't get a reaction, how far the market can move against you if you're not correct about the move. On the Wednesday, let's have a look. So Monday, Tuesday, Wednesday. Had a little buy here, so basically what happened here? So the market filled that previous day's high. It's been a very bullish couple of days and basically wanted to see a long push. I did see it to start to spike out and I got nervous and closed at a very small win. However, could have held that for about 60 points up to that R1 and beyond, but that would have been probably a realistic target to go for that R1. Missed opportunity there. It's always good to review what you've done and get a bit of learning. Now the reason I went long, obviously you had the powerful push up and no sign of turning back around, as well as the price sort of building around this area. It wasn't really looking bearish in any sense other than to fill this previous day's high, which it did pretty much at the open, so then it could go long. So institutions might have kind of soaked up that volume here, pushed it down, and then let the market ride it all the way up to the R1 and beyond. So missed opportunity there. That could have been a 1% trade effectively, or a full 1-to-1 risk-reward ratio trade, but it wasn't to be. Moving on to the Thursday now, we'll find the open point, which was this green bar here, quite a long push up. There might have been some reason to get short here, but the market didn't seem to turn around at all. I didn't trade this day, I just laid out the levels. However, at this point, you start to see a bit of rejection. You might have got short here. And a max of about 30, you might have got 40 points if you were lucky. However, you would have got stopped out at a 1-to-1 on this rally up here. So that would have been a losing day, I would say, had I have traded. Could have got long, but you've always got that previous day's extreme gap there, the high and the close, which forms a very strong target. It wasn't hit at the open, and the market just rallied. So I would always have a bit of concern that the market is going to come down and hit these levels. It didn't. Again, another bullish day. So perhaps blind buying is the way to go during this kind of a market condition. So as far as my system and my strategy, not a good day to trade. Fortunately, I did not. And once again, we did mention, so it's very bullish, and I've done a sell here because we've hit these levels and I was looking to target the close. And a lot of the time we do sort of rebound within these levels, within this range between the breakout long and the breakout short, and the close as a target. However, the market just powered up as it has been for some time, which is important to take note of and say when it's a very bullish market, don't go short. Pretty simple stuff, but that's the importance of going back over what you've done and assessing what actually happens in the market to see if you're doing the right things. Now, quite a silly trade when you look at it. We've been going up the whole time, and basically blind buys could be a very good option. Did get short, hoping to target that close gap, but it wasn't to be. Very good potential buying day with about sort of 76 points in it, aiming for that R3, but you never know when the market's going to turn back around. Didn't even set the trades up, the charts up on the 20th, 21st. Had a look at the 22nd. So this is last week now. I'm just going over 2 weeks worth of data because I haven't done the video for some time, the last couple of weeks. And we'll just find the 10 o'clock bar. Nice big spike out there and then came back down. No real clear target or anything like that. So not a trade for me, not a trading setup that I can pick out. When we look at the R3, often it is a very good selling point. So as you can see here, we've hit it and come back down for about 40 points, back down to that extreme gap at the previous day's high. It's not really a gap because it has already been filled in the early time of the session. Obviously you could get short here, just remembering that previous days have powered through that R3 and not really given it any thought as to being a good trade. So that wasn't something that crossed my mind. Again, could just be a blind buy day, and you'd be looking at around sort of 30 to 50 points if you targeted either the R2 or R3. Moving on to the next day, this is the 23rd of November. We'll find the open point, the open time. So we were below the previous day's close, and we powered right up, just kept going up to the confluence up here, which is the R1 breakout long and previous day's high. So great day to buy. It's been very strong buying lately, and we've got the close gap there above us where we opened. So we had about 5 points. Not a great buy on that front, but it just gives a bit of weight as to not coming back down against us. So about 40 points there potentially, but I didn't trade that day either. We'll keep having a look. So the 24th is the final day. I didn't map that out. I had a few things going on and I just didn't trade that period of time. So just remembering, trading is a really good way to be able to potentially earn money online without having somebody else say whether you can or can't. You simply have access to the market, you can do your thing, and you don't have to trade every day. It is very flexible and you can make of it what you want. So that's why it is such an attractive method of investing for a lot of people. We'll jump over to the UK. So I'm just going to see if I can filter the history. I'll just do it by this way. So both markets, we had losses on the DAX and the FTSE. So both the German 40, which is the DAX, and the UK 100, which is the FTSE or FTSE. So both markets didn't really have a good couple of weeks at all. So just moving back on the FTSE to the 13th. And just because this is a losing couple of weeks, it's good to note where you might have gone wrong. It's good to map out what's actually happened in the markets and review and reflect. And also to understand that it's not always about winning. You've got to deal with these times that aren't so good. Just like in any business, you start seeing a reduction in customers or traffic or sales or whatever it is, and you've got to be able to adapt and understand what's going on so you can actually improve. So I'm just going to have a look at what might have happened. Didn't really trade too much at all. So 4 trades in the past 2 weeks. On the FTSE, we'll find the open point, which is the 10 o'clock, so 10.00. Potentially people might have been going short for about 28 points to that close gap at the open. The market came up. Ideal situation is it spikes up at the open and touches this confluence here, the R1 and the breakout long, which are very close together. However, the market didn't get up there in a reasonable amount of time. It kind of drifted up and down. It touched it and went short for about 13 points as a maximum off that level, and not really a valid trade. If you had have held it for the following day, you might have got sort of 30, 40 points out of it. But ideal situation is to close, for the way I trade anyway, is to close those positions overnight so you don't get gapping. You can sleep easy and not have to worry about what's going on in the markets, and you can reflect and review what you're about to do for the following day on a clean slate. So anyway, no trades that day. Go on to the next day. This is the opening bar here, the big green spike. So it came up, filled the close gap, then came back down. Could have potentially bought it back off the pivot for about 20 points. There's no real valid setups until you get to about the breakout short. Could have been a potential buy here, 57 points up to the other side of the trading setups. And even if it did sort of come down below to the S1, you still would have been safe, provided it didn't go down to perhaps the previous day's low. Remembering that the UK has a lower true range, or range, that it usually operates in. So often I set my stops to about 30 or 40 points, which would have been very tight had the market have come down to touch that low. And then probably a target around that close, even though it had already been filled. It does still form a reasonable target to aim for if you're aiming for something in particular. So no trades again. Here I've done basically what I did the other day. I got in short. We had a red candle and it kind of faked me out into getting into the trade. I got in pre-market by the looks of that, and then the following candle we opened at market, came right up very close to the R3, and then had a pretty decent push down really for about 30 points. Would have hoped to actually touch the R3, but it didn't touch it. We kind of got a double top as well, as you can see by that point and this point over here, and could have got about 30 or 40 points on that trade if you had have gone short off the R3s. Again, it's been quite a bullish market lately, and getting short at that point before the open is probably not the smartest move, and as a result had a losing trade there for a full 1%. Not the best setup there. Having a look here, got a couple of buy positions chasing into the close, and manually close those positions as we hit that target there. So a couple of very tiny little wins there. It looked like I was quite confident about that position being able to hit the close at the very least. Was hoping for a bit more of a move, but given the recent poor activity of trading, I did jump out. And fortunately for me, I jumped out and then the market came back the other way anyway, so it was the right move for this trading day. No real other setups. People might have been looking for buy positions, as you can see by this turning around here, but the market kind of fell through and didn't form any sort of buying pattern for that particular setup. Moving on, again, sold it here, looking to target the close. The market simply just kept going up. Not ideal. If you had have sold from the high, still only about 25 points, so not really worth getting into at all. So very poor trading on the FTSE overall. Didn't trade this one, didn't even set it up those days. And we've got the 22nd of November here. Find the open, so Control F on the MetaTrader platform, and look for the 10 o'clock bar, which is this green one. Quite a nice spike up into the R1. Could have been a really nice sell, which it came back down. Well, it came back down for about 16 points, then came back up again for another potential sell. I would have been concerned that the market was just going to go long because of the buying of late. However, had you have held your position, max of about 5 point stop or risk taken before it turned right around, went right down to the other side of the cam levels, so the breakout short and the S1. So just having a look at the potential trade there, maybe 18 points to the close, and then 45 odd points to the other side of the trading window there. Didn't trade that day, but I did set up the levels just so I can come back and have a look at what's actually happened and that sort of thing, and show you guys what the market's done, so you can start learning a little bit faster than just watching and hoping to gain experience from watching the markets as they're open live. Going back and reflecting, it really does help to understand what the market does when you're not in a panic or a greed or fear situation, and you can just look at it objectively and see what actually happens. See whether you get rejections, see what gets ignored, and what forms a really good target as well. So as you can see, R1 down to the breakout short or the S1 could have formed a really good trade. However, also noting that the market hasn't been respecting these levels all that well for the last couple of weeks. So it is harder when this happens to hold your trades, because you've seen it not work, and then eventually it's probably going to work, but it's just about being able to hold that mentality when it's not working. So on to the next day, the 23rd. got one more day which wasn't tracked here. So this will be the final day on the FTSE that I'm looking at for this recap. Control F to find the open time. So we opened here on this blue, looks like a doji candle there. Market went right up, 18 points up, very close to the R1 and the breakout long. High a little bit higher than those levels. Potential shorting opportunity. However, I do like to see it touch. And kind of had a double top situation here as well. Now, if you did get short, targeting probably the close gap, which is down here, about 23 points on the FTSE there. And as you can see, it did come right down to the previous day's low. So sometimes the previous day's low does form a good target or a rebound level. About 40 points as a sort of a maximum range you could have traded on that particular day. So that's the 23rd of November. But once again, didn't trade that day. It would have been an okay trading day because you wouldn't necessarily be thinking about going long. It hasn't necessarily been all that bullish on the FTSE. And as you can see, the FTSE has a lot less range. So it's potentially better to have a smaller stop because of that. Because if you're wrong and you have a bigger stop, you're just going to lose more money than you need to. So obviously it depends on what your system and strategy is, but according to these levels and what I do trade with a smaller stop than I do on the DAX. Didn't trade that day and we've got today coming up. So we'll see what happens in the actual market and I'll do a recap next week as well, just to keep you guys up to date and keep you learning continuing on. That's it from me today, guys. Hope you enjoyed the video. I hope it helps you learn. Please do like and subscribe because your support does mean a huge amount to me here at this channel, and we'll see you next time.